Hi everyone, welcome to Tuesday. And of course, every Tuesday we take a look at the performance of the main board for the New Zealand Stock Exchange. Just remember, if you do have any questions regarding share trading, share investing, or any shares you would like me to review, by all means reach out. I'm happy to do that for you in a future video. Before I share my screen, just remember that this is for educational purposes only. Definitely not intended to be personalised financial advice. If you're looking for that, you do need to have a chat to your own financial advisor. Right, let's take a look at the performance for the New Zealand market. You can see here that I've got the NZSX 50 gross index up on the screen. And if I zoom in here, you can actually see that last week was a positive week for the market. So that is a really good sign to see after having had two negative weeks in a row. If I look down the bottom here at the bar chart, you can see there's a little bit more volume, which was a really good indicator as well. It does mean that potentially the buyers are starting to come out, and you can see that there was about $164 million worth of shares traded in the last week compared to the week before where there was 109 million. So that is a good sign to see. And if I just hold my cursor at the top of it there, you can see with the dashed line, there hasn't been too many weeks where it has exceeded that, except for some of those down weeks. One thing that I've just noticed here is we've got a little bit of a tick up on that average trading range down the bottom. Let's just see what that volatility is in the market. So we'll take that 281.84 and we'll divide it by where the indices is currently trading. And it's still not too bad with the volatility. We're looking at about 2.16%, so that is a good sign. Let's go and put our moving averages on and see what they're telling us. I always use the 30 exponential. And you can see here the market is still trading below that moving average. So to me, that's a warning sign to just stay out at this stage. We'll put on the 15-week and just see if that's doing anything different. And now if I zoom in, you can see, and I spoke about this before, that those moving averages crossed at around the week beginning the 6th of April, and they're trading down. They could be starting to swing up, but until they cross to the upside and you've got the share or the indices trading above both of those moving averages, definitely a time to stay out. We'll go and have a look at the 1-year chart and just see what that's telling us as well. And you can see on Friday, in fact, Thursday, Friday, especially Thursday, was some very strong buying going on. In fact, there were 3 days last week that there was positive days in the market. So that's really good. And you can see that these moving averages have started to swing up, which is a good sign, but we do want them to cross. So we want them to have crossed to the upside on both the daily charts or candles, which we've got here, which is the 1-year chart, and also on the 5-year chart as well. So at the moment, it hasn't done that. So we will just stay out and leave it there. Nothing else really too much to report here with the New Zealand market. It's just time to just wait and see, watch, because there is still a lot of volatility out there in the markets. In fact, I was doing some research prior to doing the videos here on the Australian market, and that too it's had a couple of negative weeks in a row. So again, for me, it is time to stay out. I haven't actually looked at the US market, so we'll just take a look at that. We'll just pop on the SPY and just see what that's telling us. And you can see here, leaving my moving averages on the 5-year, we've had 5 weeks in a row that the S&P 500 in the US has actually had positive weeks. So that is a really strong, phenomenal run. Good to see, because hopefully we will see that our market will start to follow that as well. Let's just jump onto the 1-year chart and see what that's also telling us. And you can see that it's been a very, very strong, consistent performer. And the moving averages on the daily chart, they crossed here around the 13th of April, and it's certainly been very strong. If I just look in though, this Friday's candle, that could potentially be a little bit of a warning sign there, because it's got quite a strong wick forming, but we'll just wait and see as to what's happening. I'll just go back out to the 5-year chart. Now, there's been a lot of talk at the moment as well about investing into indices, and I'm certainly pro that. And I'll just take these moving averages off, because if you're unsure how to go about investing and you want to put money aside regularly. This is where an indices like the S&P 500 can work really well. You will have to experience these drops. That is part of it if you're not going to learn how to use trailing stop losses. And if you experience a period like you can see here through February down to April last year, you're just going to have to make sure you put your money in the bottom drawer and not look at it, because that is part of investing. But if I go to all, what I want to demonstrate, and unfortunately I can't take these Ds out, you can actually see that the S&P 500 for the US is trading at all-time highs. So it's trading at the moment at about $720. And if I just scroll back, when it first started, it listed back in 1993, this ETF, and that particular day it was worth $43. So if you're prepared to ride out some of these dips, and this one where I've got my cursor at the moment was 2008, which was the credit crisis. And if I scroll forward down through here, March 2020, we had COVID, and this is normal for markets, but that can be a good way to get yourself started in investing by just regularly putting small amounts into the likes of an ETF like this one. And you can see down the bottom, it pays regular dividends. If I go back to the 5-year chart, again, you can see these dividends. So there was March, December. So it looks like it's paying quarterly dividends. Now you can reinvest those, and that does help with the compounding effect as well. That is how you can really start gaining some traction with investing, by reinvesting your dividends. So I'll stop sharing. I really hope that's helped. Now, if you are wanting to get started with managing your money better, I am running a Money Clarity Bootcamp, and that is starting the 28th of May at 10:30, and it's going to run for 3 days, so Tuesday, Wednesday, Thursday at 10:30 for an hour each day. It is a free event, and I'd love to see you there if you're just wanting to get your money sorted and getting on a track, if you like, to financial freedom. I'll include the link for this below. But in the meantime, if you've got any questions, or if there is anything you'd like to know regarding share trading, by all means, reach out. I'm here to help. Happy to answer any questions that you've got. Now, on Thursday, we're going to take a look at Vector, one of the utility companies here on the New Zealand stock market, and see how that's been performing. So until then, take care.